What are we to make of these numbers?
So, I mean, I think there's a reason JPMorgan likes to go first in bank earnings season. They tend to beat estimates. And so Jamie Dimon's a smart guy. He knows that if revenue is going to go down, which it did go down about 3%, you have to have your costs go down faster, which went down about 6%. So the story right now is discipline on costs.
Okay, and I believe we have some sound of Jamie Dimon. He spoke on the conference call today. Let's hear what Mr. Dimon had to say.
We're building there for the long run. As a risk management tool, we've always said that the way we treat that is we will be prepared for very tough times. And I think it's a mistake not to grow because you're going to have tough times. I have never seen an economy that didn't have tough times.
Never seen an economy that didn't have tough times. How did JPMorgan steel itself for the tough times?
So exactly, they're going through tough times right now. Right now is essentially a very in-between time for banks.
Sure.
So they're waiting for higher interest rates so that they can make a lot more money off their deposit base. And, they're disciplined. Basically, they've been cutting costs anywhere they can find them. They've been laying off branch workers. They've been laying off back office people. They've been moving people to cheaper locations. And those are just some of the things, the levers they have to pull to save some money.
What about the profit and asset management? What happened there? It did slide over 20%.
Yeah, and it's funny. I asked them that very question, and they cited extra litigation costs. So litigation costs went down almost everywhere except in asset management. And my guess is that essentially they have a big settlement in the works having to do with some things that Bloomberg's reported on, which essentially is conflict of interest in asset management and SEC probes.
Hugh also posting a decline commercial banking.
Right. Slight decline in commercial banking, if I recall. Not anything too conclusive on that.
Give me an overall sense of where JPMorgan is positioning itself right now.
Well, JPMorgan, B of A, a bunch of other banks, essentially they want to survive. They want to tighten their belts until higher interest rates, increases the profitability by a lot. So anytime you see any macro news that says, higher interest rates are coming, you see the bank stocks go up.
Sure.
So and the reverse, for the opposite. So their rationale is to tighten their belts, to be very disciplined on expenses until they make it to that time.
Speaking of tightening belts, as you recall back in the spring, I believe it was in May, the bank's board said that it's going to weigh changes to executive pay. How does that play into all of this?
Well, that's sort of say on pay. That's linking, and nobody said that that Dimon is overpaid. He makes about $20 million, which is a lot of money. That's like LeBron money, right? But what people wanted to see, what proxy advisors want to see, is essentially greater linkage between performance and pay. So right now pay is a little bit of a black box. These guys get huge paychecks. The goals for that are rather low, and this is just sort of greater transparency for that. Okay,
so what we're seeing then overall, not just at JPMorgan, but at the other banks on Wall Street, the cost-cutting measures, are they having an effect?
Yeah, and some would argue that they're having a bad effect because revenue is also falling faster at some of the other firms. That was the knock on B of A last quarter, that revenue fell really fast, faster than expenses. And so if you're going to cut costs, you have to make sure that you also don't, throw the baby out with the bathwater. So this is, you're going to see some differentiation. Some companies do a better job at it than others. And B of A is going to be tomorrow, and we'll see how they do.
Hugh, we have about 30 seconds. These banks, particularly JPMorgan, what do they want to hear from Janet Yellen this week? She's going to be speaking before Congress.
Yeah, they want to hear rates are going to go up, and we're sticking to that plan, and there's no deviation from that. And if that happens, that'll be good for them.